these investment property and second homes. But let me just tell you, there's a lot of options. And with rates being so low, these portfolio lenders can oftentimes, you can buy these properties in your LLC or your corporation or your business, right? And they don't go on your personal credit, and you're not getting scrutinized the same way you are on a conventional underwrite. You don't have to go through DU. You don't have to provide tax returns. It's really based upon your credit score, the leverage or the loan to value, and also the debt service coverage ratio.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Bo Eckstein. And today we're going to talk about Fannie Mae tightening their standards on investment properties and second homes and what that means to you as a single family property investor. Well, let me tell you, there's a hit to fee and rate now on these loans. So rates have gone up substantial in cost for these investment property and second homes. They're trying to tighten up their portfolio essentially of what they'll, how many second homes investment properties are being sold to. So the buyer of that, right? They don't want to buy more than, they want to make sure their portfolio is 7% less of second homes and investment properties. So that's why you're seeing the impact on costs. But let me just tell you, there's a lot of options. And with rates being so low, these portfolio lenders can oftentimes, you can buy these properties in your LLC or your corporation or your business, right? And they don't go on your personal credit, and you're not getting scrutinized the same way you are on a conventional underwrite. You don't have to go through DU. You don't have to provide tax returns. It's really based upon your credit score, the leverage or the loan to value, and also the debt service coverage ratio, which basically says, the income from the property will pay the mortgage by 120% or 125%. That's all it says. So of course, you're not going to buy a rental property if it's not going to debt service, right? It's got to be able to pay the debt and then some. So these portfolio lenders are just booming right now because when you're being underwritten conventionally, they can only use 75% of gross rent. So if you start getting a bunch of these properties in your personal name, even if you're making good W-2 income, it becomes very challenging to finance. So many investors are taking 3, 4, 5 houses and getting one portfolio loan, or they're just doing one by one and getting these 30-year rental loans. And the rates are pretty attractive. So there's options out there. And even if Fannie Mae tightens even more, which they probably are going to, because at some point in time, there's going to be, the boom is going to slow down. Right now, we're seeing this huge boom, no inventory. It's just crazy. And so at some point, we will see a slowdown. I don't know when, but at some point we will. And I think these institutional buyers are just tightening their belt because when a downturn happens, second homes and rental properties are the first to be foreclosed on, right? Because those are the properties that the owners will give up first. And we saw that in 2007, 8, 9, 10, right? Same thing. So even though there's a little bit more costs, doesn't matter if it's a good buy, it's a good buy, or you have the portfolio option. So anyways, hope you enjoy this little segment. I try to bring you up-to-date news. Please like, subscribe, and I'll see you on the next episode. Thank you for watching.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.